Welcome back to the deep dive. Someone reached out wanting to get up to speed on Marathon Nextgen Realty Ltd's Q3 FY25 performance,
Mm,
and they shared their official financial reports, both the standalone and the consolidated ones.
right.
And they've got a list of really smart questions about what these numbers really mean. So let's
Yeah.
dive in.
Sounds good. It's always interesting to look at the results, not just in one quarter,
Right.
but to think about like how the company's been doing, over a longer period.
Yeah, for sure.
Gives you a much better sense of the trends.
Right,
Yeah.
absolutely. So let's start with the big picture. How'd they do in Q3 FY25?
So good news, both the standalone and the consolidated reports show profit for the quarter.
Yep.
And actually the consolidated net profit is pretty good, 4,904.66 lakhs.
Okay, wow. That's a pretty big jump from the 3,600.34 lakhs they reported the previous quarter.
Yep.
So what drove this profit growth? Did their revenue just go through the roof or something?
Well, if you just look at Q3, the revenue from operations was 12,335.08 lakhs,
Hmm.
which is actually a little bit lower than Q2,
Okay.
which was 14,598.96 lakhs.
Interesting. So revenue's down, but profit's up. That seems a little, I don't know.
Yeah, a little strange.
Yeah.
But remember, you gotta see the bigger picture.
Yeah.
So if we look at all 9 months,
Right.
ending on December 31st, 2024,
Okay.
revenue from operations totaled 43,155.26 lakhs.
Okay.
Now, if you compare that to the same 9 months the year before,
Right.
which was 54,919.59 lakhs.
So overall,
Yeah.
but Q3 was a little dip.
Yeah, bit of a dip in Q3.
Okay, interesting.
But the overall picture over 9 months
Yeah,
is
yeah.
actually pretty good growth.
Got it.
Okay.
But let's get back to that profit jump though.
Yeah.
What really pushed them over the edge into such a good profit this quarter?
This is where it gets interesting. So the consolidated net profit for those 9 months ending December 2024 was 13,630.38 lakhs.
Hmm.
Now, compare that to the previous year, the same 9 months, which was 12,833.17 lakhs.
Okay, yeah, big jump.
So we're seeing a pretty big year-on-year increase.
Tell me more.
Okay, so a few key things are going on here.
Okay,
First, let's look at property development expenses.
right.
Those have actually gone up over the 9 months, which
Mhm.
could mean that they're investing in new projects, right?
Makes sense.
Which would then drive future revenue.
Yeah.
Then you've got changes in inventories,
Yeah.
which have been kind of like going up and down all year,
Yeah.
and managing those. That plays a big role in profitability, right?
Okay, I see. And I one of the questions I had going into this whole thing was about their finance costs,
Right.
which seem to be going up. So are those playing a role in this profit picture too?
Yeah, for sure. The reports show a clear increase in finance costs,
Mm-hmm.
and that's probably tied to how they're managing their debt, their strategies there. It's definitely something to keep an eye on as we kind of assess like their overall financial health.
I think so.
We might want to look at their debt to equity ratio too,
Yeah.
and compare that to industry benchmarks.
Okay.
See if there are any like red flags there.
That's smart.
Right.
Okay, so speaking of things that kind of caught my eye, they've made some interesting investments in these three wholly owned subsidiaries.
So
So what's the deal with that?
those are Conchi Rehab Private Limited,
Okay.
Nextzone IT Infrastructure Private Limited,
Hmm.
and Nextzone Water Management Private Limited.
Interesting names.
Yeah.
So are these investments just about diversifying their portfolio, or is there something bigger going on strategically?
That's a good question.
Yeah.
I mean, if we connect these investments to like the bigger picture,
Right.
seems like they're thinking long term,
Okay.
and maybe like beyond just the usual, bricks and mortar of real estate.
I like it.
Could this be a sign that they're planning to like bring in more tech solutions into their projects?
Tech-driven real estate. That's an interesting thought.
Yeah, definitely something to watch.
Definitely something to watch.
It'll be interesting to see how these subsidiaries like contribute to their bottom line.
Right.
Will they make their own money?
Yeah.
Will they like work well with the core business to save costs?
Yeah. Or make things more efficient.
Exactly. You got it.
Okay. So we'll definitely keep those on our radar.
Definitely.
But before we go too far down that road of speculation,
Right.
let's unpack another big thing that happened. The merger with Marathon Nextgen Township Private Limited, or MNTPL.
Ah, the merger. Yeah, that was finalized in June 2024. A big move.
Huge.
One thing that stands out is they use the pooling of interest method for the accounting,
Okay.
which is often used when two companies, under the same control merge.
I feel like a lot of people hear pooling of interest and their eyes just glaze over.
Yeah, it can sound complicated.
Can you break that down for the average person?
Sure. So basically, with pooling of interest,
Okay.
you combine the assets and liabilities of both companies at their book value, their existing book value.
Yeah.
Which is different from like a purchase method where you revalue everything
Right.
at fair market value.
Okay, got it.
So-
So how does that affect how we interpret their financial reports now?
Well, you'll see that some numbers have been restated to account for the merger,
Okay.
like other equity for the year ending March 31st, 2024.
Right.
That's been restated to include M&TPL's numbers.
So just got to remember that the mergers kind of changed the financial landscape a bit.
Exactly.
Okay, yeah.
It's all connected.
So with all these moving parts, the revenue going up and down, the profits growing,
Yeah.
new subsidiaries, a merger,
It's a lot.
what's the core message we should be taking away from all of this?
I think the big takeaway is this. Even though we saw that dip in revenue in Q3, overall, Marathon Nextgen Realty's financials are looking pretty strong.
Okay.
Their profit growth is encouraging.
Yeah.
And those investments they're making, especially the subsidiaries,
Right.
those suggest that they're setting themselves up for success.
Okay, so they're in a good spot, but you mentioned earlier there are a couple of areas we should keep an eye on.
Right.
So what are those as we look ahead?
I think there are three big things.
Okay.
First, we need to see how those subsidiaries perform.
Right. Will they bring in the money?
Exactly. And how will that affect their future earnings?
Right. Yeah.
Second, how are they going to manage their debt?
Right.
With those rising finance costs.
Yeah.
And third, we can't forget about the whole real estate market. Like, what's happening out there?
Yeah, the big picture.
Yeah. And how could that affect them down the road?
That's great advice. So a company with a lot of potential,
Yeah.
but also some things that could, trip them up. Sounds like Marathon Nextgen Realty is definitely a company worth following.
Definitely worth watching.
Now, you came prepared with some really specific questions about all this.
I did.
So let's dig into those next.
All right, let's do it.
Yeah.
Yeah, you came with some good ones. We'll let them focus on, comparing this quarter to previous periods, which we already started doing.
Yeah. We were talking about how revenue dipped a bit in Q3 compared to Q2, but then it looked different over the 9 months. So how does Q3 this year compare to the same quarter last year?
That's where it gets a little tricky. So for Q3 of FY24, their standalone revenue from operations was 11,900.59 lakhs.
Okay.
This year, Q3 was 3,892.11 lakhs. So on the surface, it's way lower.
Right.
But we got to remember the merger with M&TPL.
Right. Right.
It makes it harder to compare directly year on year.
Okay, so not a perfect apples to apples comparison.
Exactly.
Got it. But what about the main things that drove this quarter's performance? Anything that really stood out to you?
Well, the reports don't give us a complete list of every single factor.
Right.
But we can definitely get some clues.
Okay.
Like the increased property development expenses that we talked about.
Yeah.
Suggests they're really focusing on new projects. So that could be contributing to the revenue we're seeing and the profit growth.
That makes sense. One of my questions was about their cost management and how that's affecting profitability.
Right.
So what can we kind of tell from these reports about that?
It's pretty clear that they've been watching their costs carefully.
Okay.
Even with that slight dip in revenue this quarter,
Yeah.
they've still managed to bump up their net profit, both compared to last quarter and the same quarter last year.
That's impressive. Does that mean they're getting better at running their operations? More efficient?
It definitely suggests that, this efficient cost management is probably a big reason why they can stay profitable even when revenue fluctuates. It'll be interesting to see if they can keep that up as they grow, especially with those new subsidiaries.
Right, right. And you brought up a good point before about those rising finance costs and how those are something to keep an eye on.
For sure.
One of my questions was specifically about their debt management. Is there anything there that we should be worried about?
Those rising finance costs are definitely something to watch.
Okay.
It's important to see how they're managing their overall debt, making sure it doesn't drag down their profits in the future.
Right.
We talked about the debt to equity ratio, but we could also look at things like their interest coverage ratio.
Okay.
That gives you a sense of how easily they can pay their interest expenses.
Okay, good to know. So it's not just about what's going on inside the company, right?
Right.
What about the whole real estate market? Like, were there any big changes or challenges out there that could have affected their results?
Absolutely. You can't ignore the bigger picture.
Yeah.
These reports don't really go deep into market dynamics.
Right.
Things like interest rates, inflation, and consumer confidence, those all matter a lot in real estate.
For sure. It's like you can't understand a fish just by looking at its tank. You got to think about the whole ocean.
That's a great analogy.
One of my questions was about those external factors, like did interest rates change? Were there any new regulations? How might those things be affecting Marathon Nextgen Realty?
So, for example, if interest rates go up,
Yeah.
that can affect them in a few ways.
Okay.
First, it gets more expensive for them to borrow money,
Right.
which could make it harder to fund new projects
Yeah.
or to grow as quickly as they might want.
Makes sense.
And second, it can affect buyers.
Right.
Higher interest rates mean higher mortgages, so demand could slow down
Yeah.
and property prices might drop.
Okay, and what about regulatory changes? Those always seem to be a big deal in real estate.
Oh, for sure.
Yeah.
New regulations can either be good or bad,
Right.
depending on what they are.
Makes sense.
It's definitely something we got to keep track of. We can look for any mentions of new regulations or ones they expect
Okay.
in the management discussion and analysis section of the report.
Right.
Sometimes they'll talk about potential challenges or opportunities there.
So lots of things going on. But let's get back to their strategy. What are they doing to keep growing in the next few quarters?
Well, that investment in those 3 subsidiaries is a big clue.
Right.
It suggests they're thinking beyond just traditional real estate development
Hmm.
and looking for new ways to grow and make money.
My next question was about any new exciting initiatives or strategic moves that investors should be watching for. Do these Q3 results give us any hints about what's coming next?
I think the subsidiaries are the most exciting thing right now.
Yeah.
They have the potential to really impact their earnings down the line,
Right.
but we'll need more information to really judge their progress.
Okay, so those are definitely the wild cards. One question I had was, how does this Q3 performance compare to their own projections for the whole year, for FY25? Do we have any insight into that?
Unfortunately, these reports don't give us any specific FY25 projections.
Okay.
We can try to estimate based on how they've done over the first 9 months,
Yeah.
but remember, it's just an estimate.
Right, just a guess.
Yeah, actual results could be different.
Fair enough. Based on what we've seen so far, how would you say Marathon Nextgen Realty stacks up against their competition in the real estate market? Are they leading the pack? Are they falling behind? Or are they somewhere in between?
Their profit growth and those strategic investments suggest they're in a good spot.
Okay,
But the real estate market is super competitive.
right. Lots of big players.
Yeah, it would be helpful to compare their key performance indicators, things like return on equity or profit margins,
Right.
to their competitors to see where they stand.
Yeah, I always wonder how companies compare to each other.
It's important context.
Yeah. And speaking of competition, one of my questions was about how they're preparing for potential market shifts or economic challenges in FY25. Any hints about that in these reports?
Well, that focus on diversification with those new subsidiaries
Yeah.
could be a way to protect themselves from market volatility.
Like hedging their bets.
Exactly. By not putting all their eggs in one basket,
Right.
they're making themselves more resilient.
Okay, so they're diversifying to weather the storms.
That's the idea.
Smart move. What about enhancing shareholder value? Are they doing anything specific in that direction?
Well, consistent profit growth is always good for shareholders.
That's true.
But those strategic investments, if they work out,
Right.
could lead to some long-term value creation.
Okay.
I didn't see any mention of share buybacks or dividend increases in these reports,
Okay.
but that could be something they talk about later.
Right. Always good to stay tuned for those updates. Okay. Based on their Q3 performance and everything we've talked about,
Yeah.
how would you describe the outlook for the rest of FY25? Are you feeling optimistic, cautious, or somewhere in between?
I'd say cautiously optimistic.
Okay.
They've done well so far,
Yeah.
but those uncertainties we talked about, the rising finance costs, the unpredictable real estate market,
Yeah.
those are still things to consider.
So things are looking up, but with a little bit of caution mixed in.
Yeah, that's a good way to put it.
And those new subsidiaries, they really are the wild cards here.
You got it. How those subsidiaries do in the coming quarters will be key to understanding Marathon Nextgen Realty's future.
We've covered a lot of ground today. We've looked at their financial performance from all these different angles
Sure.
and really dug into your questions.
We did.
But before we wrap things up, I want to go back to those subsidiaries for a minute.
Happy to. They are the most interesting piece of this right now.
You mentioned they could be really important for their future growth strategies. What does that actually mean? What kind of future are we talking about here?
That's where things get really interesting. Remember their names: Conchi Rehab Private Limited, NextZone IT Infrastructure Private Limited, and NextZone Water Management Private Limited.
Yeah, those names are definitely sticking with me. What's so special about them?
Well, those names seem to signal a potential shift in Marathon Nextgen Realty's focus.
Hmm.
Could they be suggesting a move beyond traditional real estate development
Okay.
and into some new tech-driven solutions for their projects?
Tech-driven solutions. What are we talking about here? Smart homes, sustainable building, virtual reality tours.
The possibilities are endless. And that's what makes this so exciting. These subsidiaries could mean that Marathon Nextgen Realty wants to be a leader in the future of real estate, not just a player in the present.
That makes me wonder, what does this potential shift mean for their existing business? Will they just leave that behind?
That's another piece of the puzzle we'll have to wait and see about.
Yeah.
Will they try to integrate these new technologies into their current projects?
Yeah.
Or will they create entirely new businesses focused on these tech solutions?
So many unknowns, but so much potential. It feels like they're on the edge of a big transformation.
Yeah, it does. That's what makes analyzing these financial reports so interesting. They give you a peek into the company's past, present, and future.
All right, so we've really dissected these numbers, explored your questions, and even waded into some speculation about the future. What's the final verdict on Marathon Nextgen Realty?
To sum it up, they're a company with a lot of potential, their profit growth is strong, and those strategic investments they're making could set them up well for the future.
Okay.
But those challenges we talked about, like managing their debt and navigating the real estate market,
Right.
those are still out there.
So they're definitely a company to keep watching.
Absolutely.
Where do we go from here? What should we be paying attention to?
Keep an eye on how those new subsidiaries perform. How they do in the next few quarters will tell us a lot about where Marathon Nextgen Realty is headed.
Right.
Also watch their debt levels and any news about the real estate market in general.
Great insights. Thanks. And remember, this is just our take based on what we've seen.
Right.
I always encourage everyone to dig into these reports themselves.
Yeah.
Look at the details and form their own conclusions.
Exactly. It's all about giving you the tools to understand financial information and make your own informed decisions.
You know, that's what I love about the deep dive. It's not about giving you all the answers, but giving you the means to find them yourself.
I agree. We help you dive deep into the information and come up with your own understanding.
Well said. And on that note, I think it's time to come up for air from this deep dive.
Time to resurface.
But before we go, I want to leave you with one last thought-provoking question.
I'm always up for a good challenge.
So, given that Marathon Nextgen Realty might be shifting towards these tech-driven real estate solutions, could this be a sign of a bigger trend in the industry? Are we about to see a real estate revolution where technology is at the forefront alongside sustainability and a more integrated approach to development?
That's a great question. I think that's something each listener will have to think about based on their own knowledge of the market.
A perfect note to end on. Thank you for joining us on this deep dive into Marathon Nextgen Realty's financial performance.
It's been a pleasure.
We hope you've gained a better understanding of where they stand, their strategies, and all the exciting possibilities ahead.
And until next time, keep exploring, keep learning, and keep diving deep into those topics that grab your interest. You know, there's one thing about these subsidiaries we haven't really talked about yet, and I think it's pretty interesting.
Oh, I'm intrigued. Tell me more.
Remember how we were saying that those subsidiaries might mean they're moving towards tech-driven real estate solutions?
Yeah, definitely. I'm still thinking about all the possibilities.
Yeah. Well, the thing is, two of them, NextZone IT Infrastructure Private Limited and NextZone Water Management Private Limited, they seem to have a really specific focus, and it might be kind of unexpected.
Okay, I feel like there's a but coming here. What am I not seeing?
Not a but, more like a cool observation. You know,
Next
think
piece.
about it. IT infrastructure and water management, those aren't just like random tech words.
Right.
They're actually essential parts of any big real estate project.
Yeah, you're right. I see what you mean.
So could it be that Marathon Nextgen Realty isn't just trying to use these technologies in their projects, but they actually want to control the whole thing?
Wow, that's a big idea. They'd be going from like building stuff to being more like a real estate infrastructure company.
Exactly. Imagine them designing, building, and managing everything.
Yeah.
The buildings, the tech, even the utilities.
That's a huge change. Why would they want to do that? It seems so complicated.
Well, think about the advantages. They could control costs better,
Okay.
make sure the quality is high, and manage the timelines. They could also make things like smoother for their customers.
Yeah, better experience.
And maybe the most important thing, they can make money continuously through those management services.
So it's a risky strategy, but with a lot of potential upside, they're basically betting that they can handle this whole real estate ecosystem.
That's exactly it. It'll be really interesting to see how they do in the next few quarters. Will they pull it off? Or will they realize they took on too much?
It's like watching a business thriller, and we've got the best seats in the house thanks to these reports.
Totally. And remember, this is just our interpretation.
Yeah.
Keep digging, ask more questions, and come to your own conclusions about what this all means for Marathon Nextgen Realty.
You know, that's what I love about the deep dive. We don't just tell you what to think, we help you figure it out yourself.
I agree. We give you the tools to understand complex topics and come up with your own insights.
Well, I think we've successfully navigated the depths of Marathon Nextgen Realty's financial performance.
We did it.
We've analyzed where they are, what they're doing, and even thought about those exciting possibilities for the future.
It's been quite a journey.
It really has. Thanks for joining us on the deep dive. Remember, whether you're exploring financial reports, scientific breakthroughs, or anything else, we're here to help you understand the information that's important to you.
Absolutely.
Until next time, keep exploring, keep learning, and keep diving deep into those topics that spark your curiosity.